turning to Asia right now and looking at China, we wanted to highlight the Yangtze River again. And this is just taking a snippet from Wuhan. And the one thing I wanted to point to is that we're already in the early part of the dry season. So when you think about the ebbs and flows, there's the monsoon seasons that hit India, Pakistan. Obviously, we've talked about how aggressive it's been in Pakistan at this point. But you have the same thing in China. And if you remember, back in 2020, we were talking about how the Yangtze River was overflowing and there was record flooding of multiple hundreds of years levels. But there is that dry period. And the problem is the dry period started much sooner and way more aggressively because of not only the drought, but also the heat wave. So that's just a long way of saying it's going to get worse. And again, I'm not saying that to be mean or whatnot. It's just when you look at the data, there's typically a continuous dry period that comes through, and that's why there's not going to be any real reprieve for the region when you look at the Yangtze River, which is why you have farmers trying and people trying to dig deeper and again increase flow by digging out some of the bed of the river. But if you think about, if you do that, then you're reducing the water level even further, creating again a problem that can really last well into the next wet period. And again, these are the problems that are hindering not only the food front, but also the industrial front. 18% of, depending on the numbers you use, 16 to 18% of power generation is hydro. There's chip manufacturing requires a lot of water. So when you start looking at the industrial front, and especially when you look at Wuhan to the coast on where the Yangtze River flows, there is a lot of Apple, you have a lot of big companies. I'm just going to pick on Apple for a moment, which is why they're looking to move some of their production to Vietnam and other areas, because this is going to be a big issue, especially when you start thinking about the Christmas and the holiday season of what is available, what does the supply chain look like, and this isn't helping. So now when you look at the rising performing loans ratio in the property development sector, it's continuing to move up. We just see that moving at the higher level. When you look at Chinese developers post the worst earnings since at least 2008, not surprising. And the issue is, if you look, it's progressively getting worse. And even though China's trying to stimulate, they also have to worry about the yuan. Like, how quickly is the yuan devaluing? How is it devaluing against the yen? And we're going to talk about the yen in a moment as well. So when you start looking at, the Vice Premier Han Zhang spoke at the Energy Low Carbon Development Forum, and this is why it's kind of funny, because the message is energy security is paramount. So local officials better get busy to deliver steady supply of thermal coal at stable prices, stable supplies of oil and gas. But remember, this is the low carbon forum. So Han also called for efforts to ramp up the use of renewables, promote the energy sector's green and low carbon transformation, notably the increased use of clean coal. So when you look at what they're trying to do and you start putting into the backdrop of stimulus and problems on the economic front, they just are concerned about availability. You're losing 16 to 18% of flow, and how that is essentially masking some of the problems or creating more problems in terms of where those flows are. So when you start seeing that there's been a huge ramp up in lockdowns, is that to hide how bad things are? Is it more of political theater because there's still some uncertainty about Xi heading into Congress? They've been pushing more and more, Chinese communism with Xi characteristics, and you're starting to see this pivot and this push to reinforce that Xi is good for the party, Xi is doing right by the party. And I think trying to again pivot some of this, because you have these problems, but you also have power shortages. So how do you avoid power shortages? Well, we're going to use more coal, but we're going to make it clean coal. The philosophy behind Beijing's energy planning is not as contradictory as it sounds. Coal is still headed for the exit to meet Xi's climate pledges, but how quickly that happens depends on when renewables can take over without jeopardizing energy security. So again, that's open-ended. So you could say, well, he's meeting his pledge, but when it makes sense. So again, you kind of see the double-handed the way that works. I mean, if you can show that coal is not polluting, do you stop using coal? Well, no. So again, there's a lot to unpack in that, and there's a lot of things that to look at to go through. And Xi staying in power is paramount for Xi, from their opinions on his supporters and the party. So they're going to do everything they can to protect pricing to keep that moving forward, while you have, again, that pivot more on the yuan side. So when you start looking at the pressure points in terms of the CNY fix versus expectations, it's costing a lot. The cost of doing this in terms of trying to maintain that fix, people are putting pressure on it. And that's when you start looking at the US dollar versus the yuan inverted, you get an idea that people are just pressing it down, and it's costing a significant amount to offset that. And it's because you're seeing the deterioration internally, and we're going to talk about a lot of the different pressure points when we start looking at exports and imports. So when we start looking at exports and imports, this is when you can look at the trade balance. So here, I think it's very important that when you start talking about exports, it was expected at 13%, came in at 7.1%. Imports were expected to be at 1.1%. They came in at 0.3%. As I said in the previous comments in Europe, or I should say for Germany, imports coming down or underestimating is a leading indicator. Local demand is being hit very hard. So then in that case, foreign reserves are being hit really hard. So the expectation was to have foreign reserves of 3.065 trillion. Instead, they had 3.054 trillion. Still above the 3 trillion mark, but that number is very, and again, it's important because of the way the mindset. But when you look at the non-performing loans, you look at the underlying pressure in the economy, what assets are backing these levels? What assets are backing this? So then when you pivot that down to the yuan, well, investors are like, you're losing foreign reserves, your imports are slowing, indicative of the fact that your exports are going to continue to come down. There's no local demand. I'm going to pressure and push down the yuan, and the PBOC has to step in. So how can you continue to stimulate if you are fighting against the market and trying to protect the fixed rate while it's getting pressured? And again, that's where you see this compounding impact, which is creating those issues. So China General Service Business Index, again, had a bounce. But when you look at the correction, the GDP Weighted Stringency Index has gone up. Because when you look at, there's new lockdowns. So yes, there was a bounce in service activity, but when you look at what's going to happen in September going forward with renewed lockdowns, renewed slowdowns, again, it's going to drop back down. So this just looking at, again, the China export shares, because we want to bring it all together now. Not to quote the movie, but the share in world exports. So personal computers, and this is when you start to compare it against Japan, because you have the yen, which is at the lowest it's been since 1998. So they're going to attract more interest based on just the cost, but China needs to protect their currency, but they also need to let it devalue to kind of match and compete against the yen. But how do you do that when you already have the market putting pressure on it? So it's this fine line. And then when you start looking at the world exports, personal computers have slowed, mobile phones have slowed, parts of the personal computers. Remember that intermediate piece we talked about in segment 1? All of that is coming down. So both of these economies are going to slow. The question is going to be, where is it going to slow into? So when you start looking at Japan, who is importing a lot of this, and China, which is exporting a lot of it, well, if Japan is slowing and the yen is getting depreciated, then, well, how much can they spend on the exports from China? And can China then circumvent Japan to try to keep their exports? And you see, again, there's just so much pressure to the downside based on Japanese imports from China, South Korean imports from China, and then China's just push into the global market. And that's now on top of Omicron subvariants proliferating across the country, and not in a huge way, because if you think about a population of 1.2 billion, there was 2,380 new domestically transmitted symptomatic infections, 9,000, which was up from 2,100, 9,800 new domestically transmitted, up from 8,600. But, the record-breaking impact, the current COVID wave is the most geographically widespread since the pandemic started, but it's still small. So on Saturday, 33 cities were under partial or full lockdown, affecting over 65 million people. So not only do you have exports that were already slowing, but now you have imports that are going to slow further because you have consumers coming down. So realistically, when you start looking at this, multiple major cities are tightening COVID protocols, and that is creating more and more pressure. And this just puts into context just the amount that is being lost when we start looking at Chinese cities classed as medium to high COVID risks is accelerating. And the problem is, at this point, you have the Mid-Autumn Festival. So September 10th to 12th is China's Mid-Autumn Festival, the country's second most important holiday after the Lunar New Year. But given the anti-virus measures, you're going to get a huge hit to, again, the demand for gasoline, diesel, airline, aviation fuel, jet fuel in general. So when you start looking at these ratios, and that's when you look at the People's Bank of China said it would cut the foreign exchange reserve requirement to 6% from 8% beginning September 15th. Well, what does that, how much impact is that going to have given the pressure that we're seeing? So when you start looking at these reductions while you're locking down, while your economy is slowing, you're trying to ease, but it's not enough. That's where we continue to see a lot of these pressure points. Now, marry that against the Japanese yen, and when you start looking at what are the consequences, the biggest monetary experiment in history, the Japanese yen falls to its lowest level against the dollar since 1998, leaving it down a fifth this year. So as you have this pressure coming in and now people piling and putting more pressure on these currencies, China is going to get impacted. And again, that's where you're going to see a lot of these pressure points and the underlying problems. South Korean CPI slowed a bit versus the survey, was expected at 4.5%, actual 4.4%. But there's weakening sentiment across the board as people within South Korea are looking at this, looking at their imports, their exports, looking at what's happening in China and in Japan, looking at the pressure of Asian currencies. It doesn't really bode well for additional investment, which is why we see some of these underlying, some of those additional problems. India manufacturing PMI remains above 55, still growing. And then when you look at ASN manufacturing PMI, remains fairly stable. But if you take the backdrop of what we've been talking about, that's where we see the slowdown is going to be it's going to be swift. You're going to see a very quick drop, but then it's going to stabilize. And the reason why I say it's going to stabilize, even in a contractionary standpoint, is because you still have more flow coming from China into the ASEAN region. So when you start looking at that pivot, you're going to see manufacturing really hold in better than I think people expect. And that's where when you start looking at in a washout, there is going to be opportunity. There is going to be places to put your money, especially when you're looking at some of these Asian nations. China, I think, is going to face a world of hurt, but there will be opportunity in some of those emerging markets. The question is going to be, can they get to the other side of the food subsidy energy side? And that's where we do a lot of that research on. The answer is yes and no. Some of them will, some of them won't. And we delineate which ones we think are the case. So again, a lot to come on that as we continue through the rest of this year. So that's what we have for you today. If you have any questions, please let us know. We'd love to get your feedback. And again, thanks for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.